Based on those numbers we're seeing there, some reactors are reacting positively to this mega bond sale.
Exactly. So especially in Hong Kong, we see it's outshining its peers in Shanghai and also Shenzhen. It's a breath of fresh air for the economy and long-term investment, obviously. And there's a lot to digest in this news. So for more analysis, let's bring in Tommy Xie. He's economist, head of Greater China Research at OCBC Bank. Tommy, hi there. First of all, we have the rare issuance of ultra-long Chinese bonds, some as long as 50 years. Not even sure if we're still around, right? How do you read into such move at this timing?
Okay, sure. I mean, first of all, this bond issuance is not really something new because in March, during the NPC meeting, China has already previewed they are going to issue 1 trillion this kind of a long-term special bond, right? So I think in terms of timing, why now? I think partially because of the domestic reason, because in the past few months, there were a lot of speculation on the easing monetary policy. That's why we are seeing the investors actually are pushing the yields down. If you look at the 30-year bond, for example, in the late April, actually, the yield is as low as 2.4%. That's very low, right? Because if you look at the US, you look at outside Singapore, etc., I think the yield is much higher. So given the yield is still on the relatively low level, I think it's a good timing to issue the longer end bond because that can save the government a lot of costs in terms of the financing costs. Even though for the past few days, the yield is coming back to maybe 2.5, 2.6% kind of the level, but it's still very cheap for government to financing such a long-term investment. So from that perspective, yes, it's a good timing for the government to issue the bond. But this bond is not the one-off, as a preview by China, that are going to be the recurring. So for the next few years, every year we're going to see this kind of issuance of the 1 trillion bond. So that certainly will be very supportive for the economy as well.
Right. So, Tommy, you mentioned this is going to be a recurring thing. But in terms of where the money is likely going to be spent to support the economy, can you just walk us through what are some of the key sectors?
Sure. I think this is not the first time China issued a long-term special bond. The last time was 2020 when they tried to fight the pandemic. But I think for this time, the use of the money will be different. It's not going to fight the pandemic anymore. So where the money will go, I think most likely will go to the sector which is in line with China's long-term strategy, right? I mean, for example, right now, China is talking about, we call something called the new productive force. They want to spend more money on the R&D to give China long-term competitive advantage. So I think those money will go to those sectors. For example, we are going to those emerging sectors or the future sectors, whether being the buzzword like AI, chips, semiconductors. So I think those are the sectors is likely to receive the support from this long-term special bond. So I think those something certainly is worth watching going forward for the market.
Okay, Tommy, let's shift gear a little bit here. In markets today, we see Li Auto, BYD sold off in trade. That's after the announcement of U.S. trying to hike tariffs on Chinese products, including EVs being one of them. What do you think are the likely impact on the affected sectors?
Yes, I think given the rising, EVs, tariffs, of course, there will be some kind of immediate reactions. In particular, depends on the company, depends on the exposure to the U.S. market as well. If you have a high exposure to the U.S. market, you will be really affected. But if you have a lower exposure, I guess the impact won't be so significant. But again, judging by the trade war 1.0 from 2018, 2019, the long-term impact may not be so significant, right? Because if you look at the trade war 1.0, in fact, the Chinese company are still gaining market share until all the way to 2020. So the only turning point was actually the Ukraine war, right, which actually caused China to lose some of the market share. It's not because of the tariff. It's partially because of some kind of the concern about the long-term implication of the war. So I think those are the things actually what we are seeing. So that's why I think back to this story, it's a still small scale. It's only targets maybe like EVs or the solar panel for now. So I think the overall the long-term impact may not be so significant at the current stage.
All right. So, Tommy, in a nutshell, will these tariffs, are they going to hurt or help U.S. competitiveness in the longer run, even though we don't know how long the war is going to grind on for?
Yeah, I guess it's a difficult question to answer, but it really depends on the sectors, whether you have the leading advantage or you don't have the leading advantage. I guess if you try to impose the tariff on certain sector, you are the leaders. that may actually help you to protect your leading position. But if it's not, it could have a different impact. In the fishing sectors, we have something called the catfish effect, right? So let's say you caught a tank of sardine fish, right? If you want to bring this tank of the sardine fish back to shore alive, so the better way is you put some catfish into the tank. So because the sardine fish is going to run away from the predator, so most likely you're going to bring the whole tank, alive back to the shore. So I think from that perspective, I guess the Chinese company sometimes can be the catfish, which can keep the sectors, the level of the competition, level of the activities high, right? So from that perspective, I think maybe the tariff may not be so good because you are losing out this catfish. You may not have a good impact on the sardine, in the long run.
Well, fascinating stuff. Thank you so much for your interesting insight today, Tommy Xie. Tommy Xie is economist, head of Greater China Research at OCBC Bank.